before you run off and buy a car or go purchase anything that you may have to get a loan for because you see that rates might be coming down, let's talk about rates and costs. Two things that matter. We'll talk about rates quickly, but also then we're going to get to costs because this might be a bigger factor, and I'm going to give you an explicit example. I do this 3 days a week, and I have multiple shows during the week to help you get out of debt. Please do like if you find this to be valuable, and I always appreciate if you subscribe. You'll be able to see everything in the playlist and everything that comes out from here going forward. So the Fed, as you're probably familiar, the Federal Reserve will change their rates, which affects banks' borrowing rates, which affects car loans and mortgages and personal loans and things like that. That's what matters to you. So a lot of people may have been waiting the last couple of years thinking, when are rates going to come down? And you'll see a lot of articles telling you, hey, rates are coming down. You should go buy stuff. Why? Because the U.S. economy is, I believe, about 70% of it is spending by individuals. So to keep the economy chugging along, they need individuals to spend. If individuals don't have money to spend, they want individuals to borrow. So be careful with what you read and just understand that there are often some biases in what they say. There may be reasons behind it. I'm not a financial advisor, just giving you my opinion. First rates, then we'll talk about costs. This September 18th and 19th, which as of the recording of this, it's about a week or two away, these are the chances that people think rates are going to go down. Rates right now are at 5 to 5.25 as of, and they've been this way since July of 23. So this is the current rate environment that we've had since the July 23. Every time the Fed has had a meeting since then, they haven't lowered rates. It looks like, because of various reasons, the Fed has two things they're supposed to do: keep unemployment down and keep inflation down. Both of those things seem to be a problem. So there are various sites online that will tell you odds, and they all seem to vary, but generally speaking, for this next meeting, September 18th and 19th, 70% of the people think there may not be a change, and it looks like about 30%, again, depends on where you look, think that it may come down slightly. Okay, a quarter, or what they call 25 basis points. Then, November 6th and 7th is the next meeting, and then there's a December, and then January of next year, and they just keep going. As you can see, at that next November meeting, some 30% think it'll come down to this level, 475, 50% a little lower, and 15%, and yes, the math doesn't add up perfectly, a little lower. And then the December meeting, as you can see, there are some that think we might be as low as 3.75, 10% of the people, and then they've got all the way up to 4.75. So by December, it looks like the majority of people, unless they didn't even give them a choice, believe that it will come down at least a little bit. So it looks like most people think that by December we'll have some sort of a cut. And you'll be seeing articles talking about how rates are dropping, go buy stuff. So hold on. This zone of 3.75 to 4 isn't a huge difference, but it is a big difference in how it affects things. That's been, the last time we had that was November of 22. It was that year in March when they started to raise rates. We had been at 0 and 0.25, and as of March of 22, they went up 0.25 to 0.5, and ever since then they've gone up and they stopped here. Okay, now, what does that really mean? Let's talk about it. I'm going to give you an example of a car. So after discussing all of the rate information, what really matters? Let's talk about rates and costs. Over the last 4 years, I read an article. They said car payments have gone up about 30% based on the fact that car prices have gone up and interest rates have gone up. It drives me crazy that they always seem to want to talk about a monthly payment and not the cost. They do that on purpose. I have two calculators on the site. I'll put links below with regard to cars so you can see the true cost of a car if they merely just want to give you a payment. But you're going to see, like I said, many articles trying to get you to go purchase something like a car because they're going to say rates are dropping, it's a great time to buy. I'm going to show you 3 examples here. First, let's focus on these two. These two both have a car of $40,000. Why? Because 4 years ago, you could have gotten a $30,000 car, and if things have gone up 30%, that $30,000 car is now $40,000. Okay, so you've got your $40,000 car, and currently rates on a new car average around 10%. 60 months, $850 a month would be your payment. Total cost when you're done paying for it, car plus the interest, $51,000. But here's the monthly payment. Now, if rates start going down between now and the end of the year, maybe we'll see a drop, let's say, about to 8%. So what does that really mean? Again, apples to apples. We've got $40,000. We've got 60 months. The only thing that changed is the rate. $850 to $812. So if you see all these articles where they're jumping up and down telling you to go buy stuff because rates have come down so much and it's going to make such a big difference, is it? Do you care? $38 on an $850 payment? No, not a big deal, in my opinion. You're going to end up paying $51,000 over here. You're going to end up paying $48,000 over here. That is $3,000 over time. But monthly, not a big difference. Okay, that's rates. What they're not jumping up and down about, or even discussing with you, is cost. Because there was a period of time where things shot up around 20%, just like 2 years ago. And every month thereafter, on a year-to-year basis, it's been 3 to 4%. Inflation is still running high, and prices never came back down to that pre-jump level. Food, cars, homes, you name it. Doesn't mean they won't, but they haven't at the moment. Okay, so if the car was back to the price it was 3 years ago, it would be a $30,000 car. Now we're talking about cost. So forget this one in the middle for a second. You've got a 10% rate on a $40,000 car and a 10% rate, apples to apples, on a $30,000 car. What's the difference? $850 and $637. Is that significant? I would say so. $213. You went from $800 down to $600 essentially. You'll end up paying $38,000, which compared to this one is quite the savings, right? That's $13,000 difference in payment. Of course, because it was a lower car. What am I pointing out? What I'm pointing out is you're going to see in the media that these are coming down and you need to rush out and you need to start buying things. You will also see, although it's hard to find, the fact that there are those that believe that the stock market might be a little overpriced. Stocks may be a little overvalued. Their PEs, price to earnings, may be higher than they have been historically, and therefore we might be in for a drop in asset prices. Not just stock market, but potentially things like vehicles. If that happens, the cost will come down. In my opinion, I am not rushing out to go buy something even if rates have a nice drop. Why? Because until the costs come down, or there are significant other changes in our economy, I need lower cost. So just be wary of what you're seeing in the media. Just because they jump up and down and say rates have changed, make sure you use the math and you put it in a calculator to see if it actually makes a difference to you, or if you want to wait and see if car prices may start coming down. From what I've seen, dealerships are having cars sit on their lots longer than normal. Personally, over my lifetime, I've only bought one new car. I actually leased it and then bought it every other car I've had, and I've had many of them because as you can see I'm old. I've always purchased used, but it doesn't matter. The point is if you're looking for a new car, those costs, I believe, might start coming down. But just know the difference between rates and cost, because they don't like to talk about this. They like to focus on that. And that really doesn't help you as much as this. I hope that was helpful. Have a great day. Please do like if you found this valuable. I appreciate it. And please do subscribe, because I'm always putting out new videos to help you understand what's going on in the new finance world that we seem to be embarking on, as well as helping you get out of debt. And every Friday, helping you create generational wealth for you and your family, beating inflation and doing what the rich do. Because real freedom is financial freedom. Thank you.